Hi, this is Stacey with Envision Financial Planning, and I'm back for another episode of Better Financial Health in 15 minutes or less. And today I'd like to spend a few minutes talking about why good news is bad news in the markets and vice versa. You may have noticed over the last month or so when economic information is released and it says, the unemployment rate is down, hiring is up, more people are working, while the market instantly plummets. You may say, well, isn't that good? People are working, they're paying taxes, they're buying stuff. Well, yes, it is good. But what people are looking at from an investing standpoint is, what does the Fed have to do to get ahead of inflation? And so if the economy is still going super strong, the Fed is going to have to keep raising rates to try to slow down that economic engine. And as they raise rates, and higher interest rates mean the value of those future earnings from corporations are worth less today. So that affects the valuations in the stock market. And so that's why on days where the economic numbers come out and they look good, that the market performs poorly. We've also seen, today's March 21st as I'm recording this, we've also seen, as bad news has come out about these banks over the last couple of days, that the markets have actually gone up. So shouldn't they go down? Our financial system's having trouble. Isn't that bad news? But in the perverse way that the markets look at that, they say, well, that'll lead to the economy not being quite as healthy, won't be as much money to lend, the Fed will slow down their interest rate increases, so therefore that's viewed as a positive. And so that has caused the markets to go up. So that's why you've had these days where positive stuff, bad markets, negative stuff, good markets. It's a crazy world. But what I would encourage you to focus on is not these day-to-day movements. It's that over long periods of time, the way that you will do the best in the markets is owning broad pieces of the market, not an individual stock, not a super specific, like the semiconductors where the companies are founded in Palo Alto, California. That's not the way to do investing over time, because if you get very specific with your portfolio, you're going to have to pay a lot of attention. You're going to have to make sure that your investment thesis hasn't changed, management hasn't changed. If you just buy big pieces of the market, large US company stocks, small US company stocks, large international companies, emerging markets companies, and you just take very low cost funds like that and you put them in your portfolio, then you can go live your life periodically, once a year, come back and sell the ones that have done the best, buy the ones that haven't done as well, and not worry so much about it. And that's really what investing is. It's buying good, solid investments, holding them over time, minimizing your taxes, minimizing your expenses, and then letting your money work for you and using money as a tool to do the things that you want to do to enhance your life. Not necessarily keeping up with the Joneses, but being able to provide education for your kids, purchase a home, take trips, experiences with those that you love, friends, family. That is really where your money will work the most for you. And be careful about getting into the part of investing that, in my opinion, is more like gambling, where you're really betting on something very, very specific coming to pass. You may be right, and you can win big there, but that's more like buying a lottery ticket. It may work out for you, you may get nothing for it. Whereas if you invest over time and you're patient, because let's face it, there's going to be bad times to be investing. Last year was a great example. But over time, the markets work and they will work for you. So just know that the market doesn't always make sense, but over time, it definitely trends upward. And when it's going the other way, just try to ignore it. That's why sometimes good news is bad news, and bad news is good news. This has been another episode of Better Financial Health in 15 Minutes or Less. I'm Stacey Hyde.